Markets fall for the third straight week on global banking crisis, rate hikes by global central banks and the amendments to the finance bill. The Nifty falls 1%. The broader markets underperform. Today on Editors Roundtable, we discuss the implications of the finance bill. We put the spotlight on IT and hospitality, and we take stock of GQG Partners in their portfolio. I am Reema Tendulkar, and with me today is Nimesh, Nigel and Prashant. Hi guys, I'm waiting for that sigh of relief. What a week, right?
Wasn't there? I mean, it was like such a tough Friday, yeah? I mean, by the way, so much of news.
We're still waiting for closure, right, with that STT.
Oh yeah, exactly. So nobody knows.
Still.
Yeah.
You know, you still get that lurking feeling that we're done for the week, markets are shut, but we're not done with news flow. Something's going to hit
I'll tell you, Reema, I woke up this morning actually thinking that it's going to be a nice, quiet Friday.
Relaxed Friday.
And you will slide into the weekend, and then, we'll see on Monday. And it just started, boom, right from the word go, right? With that debt mutual fund thing, which sort of caught everyone's attention. And then, as if that was not enough, mid-afternoon, people realizing that this STT is also a very big change.
In fact,
which
there were
is still
150 amendments, so to speak. I believe there were 150 amendments.
You were talking about some number of pages and...
It was 220 pages, the finance bill this time. Typically, it's 40 to 50 pages.
Yeah.
I think there are some 20 new sections and about 64 odd amendments.
Amendments, yeah.
Right? Typically, these things don't happen in the finance
And when
bill,
you thought all the domestic cues were done and dusted, suddenly you had the European banks that started collapsing.
Yeah.
Deutsche Bank down close to around 8%. So I take that point. Prashant, you thought you were going to have a nice, easy day. Anything but that.
And by the way, it almost felt like budget day,
Yeah.
without the sets and
the speech.
The free food, and anyway, let me just quickly tell our viewers what to watch out for. I mean, it's almost living life on the edge, right? It feels like that because things were settling down with the US banking issues, and the Fed was behind us, and the budget, of course, was almost 6 weeks old. Who would have thought that budget is once again is all we will be talking about this Friday? But that was the nature of the market today. So mood is pretty subdued, and I think Nimesh will attest to it as well. And I don't think there is any sort of indication that this mood is going to change on the dime, because what can happen, right? Imagine what can happen. I mean, of course, the unexpected sure can happen in a positive way as well, but doesn't look like it. The Nifty looks close to retesting the 16,800, 16,850 levels. We got 2 touch points on that level in the last 10 days. Both were respected, but, well, third time lucky, we will see. Tax increases on financial instruments also soured sentiment. It's not that the tax increases are huge or anything of that sort. It's just that, there was no mention of this of any of this in the budget. So what changed between the 1st of Feb and today for these completely new things to come about? Usually there are amendments to what is already included in the budget. And in any case, these are increases, right? So incrementally, they don't help. They hurt to whatever smaller degree. Global markets have been seeing this 1 step forward and 2 steps back, the kind of movement, just in terms of price action also. The reasons for the Fed's dovish shift and Yellen's comments are actually, in a way, worrying, right? So what did the Fed say? They said that, if this had not been the banking crisis, our forecast would not be 1 more 25 basis point hike. It could have been at least 2 more. I mean, about 2 more. And, Powell said that this is guesswork, but it does show you the direction. What they're essentially saying is they expect credit in the US system to be impaired. Credit will tighten, and that's the reason why we don't want to hike interest rates. On the other hand, the Treasury Secretary Janet Yellen's comments basically show you that they will not intervene on a blanket basis. The threshold of pain has to be high, and it has to be on the verge of becoming systemic, and then they will kind of step in. Again, not exactly the best kind of situation for the markets. And of course, as Nigel just said, do markets need to worry about big financial institutions like Deutsche, etc. out of Europe? One does not know. One is not sure. So we are hanging and living life on the edge, as I said, at this point in time. Let's welcome in Nilesh Shah of Envision Capital, who's with us for a quick chat on things. Nilesh, your first brief look at the market as we had today on Friday, and of course all the news flow with regards to all these budget changes. Very briefly, what did you make of them?
Well, I think it just proves one point that market does not like any bouts of uncertainty. Markets don't like any kind of tinkering and any changes which probably could hurt investor returns and things of that kind. So it can take some time for the market to be able to absorb all of this and move forward. But I think in an environment which anyway is impacted by a lot of things which are, I would probably call them as a bit ugly globally, I think, and then on top of that, if you have a bit of tinkering here and there on the domestic side, it just impacts the sentiment further.
Nilesh, hi, point taken. But before we get further, Nimesh has walked over to the big wall and there has been a big